Good morning, everyone. So we're going to finish off this year by talking about how you manage your expenses in your business. And I'm hoping that you've been following this series of talks because I just want to orientate you around where we are. We spoke about driving sales in your business previous to this, and then also managing your gross profits. And so today we're going to focus on managing expenses in your business, but I just wanted to reorientate you to the income statement so that you remember that how important it is to record everything in your business. So when we started, we spoke about sales turnover. So this is just an example of what your income statement should look like. And when we spoke about sales turnover, that was in one of the previous sessions that I did. We spoke about how we can either increase our sales by improving the number of customers that we have or improving the amount that they spend. So those were the two factors that we covered when we spoke about turnover or sales or revenue or income. Those are all the same things. And obviously the ultimate goal of this whole process is that we really improve our profits. And so always remember that if you feel that your sales are going down, that the two things you need to investigate are, do I have enough customers, or are the customers that I have spending enough money? And then you put in an intervention to rectify that if that happens. And then we spoke about the cost of sales previously, and that's just to say, what is it costing you in a given period, normally in a month, for you to make the sales turnover that you're making. And the calculation for your cost of sales is to look at your whatever opening stock you may have in your business, anything that you bought during that period, and then you take off your closing stock, and that will give you the net effect for your cost of sales for this given period. And then we end up with our gross profit, and that's what we spoke about last time. So you manage your gross profit by managing these two elements in the income statement. And today's focus is going to be on operational expenses. And there's a whole list of ops expenses that you would have. And it says ops expenses particularly because it is the expenses that you need to operate your business. And I always, a lot of small businesses put expenses through the income statements or expenses through the business that may not necessarily be directly related to the business. And so we'll talk about that a little bit later. But I always say to people that attend this kind of session that when you run your business, you should run it as if you want to sell it one day. And so you need to put through legitimate ops expenses, because after this line comes your profits. And so if you put so much expense through your business that you're not making a profit, it obviously becomes difficult to get a good price for it if you do want to sell it one day. So just think about long-term what your intention is in the business, because there are some expenses that you can put through to reduce your tax burden. But by the same token, then it's on your income statements in any event, you're not going to be making any profits. And so you'll see here that this profit, this operating profit, is the same as EBITDA, which is another term that we use for operating profit. And it basically stands for earnings before interest, tax, depreciation, and amortization, which you can see at the top there. I'm not going to go into that detail now. And then the rest of your income statement, you take off your interest and your depreciation, and you end up with your profit before tax. And then obviously your tax comes off that. And so we always like to equate it, just as a reminder, to the water filter, where the more you put in the top, the more will come out the bottom, and all the expenses and everything work as a water filter does. So we always say that the first rule of growing profit is to gooi more water. So the best way to grow your profit is to increase your sales. And then the second way to grow your profit is to manage your margin, which is this gross profit that we're talking about here. And then the third way to get more profit in your business is to manage your expenses. And so it kind of builds, one thing builds on the other. And that's why I wanted to just orientate you around the income statement before we got stuck in. And so we're going to focus very much on this line this morning, which is your operating expenses. And you'll see that when you look at your list of expenses in your business, it can go on and on and on. And so what we like to do is we look at which expenses can be made more cost effective, which expenses can be reduced, and if necessary, which expenses can be eliminated. And so the first expense that we have would be accounting, and this refers to the bookkeeper, or if you're paying your spouse or anyone to do your accounting, or you have someone basically that's just keeping your books, that would be an expense that you need to account for in your business. And so any accounting expenses would go into this line on your income statement. And just a note that when you see a full income statement, it will actually list these expenses, because we're going to talk in a minute about how we benchmark them. So you wouldn't just see a summary line that says ops expenses. When your accountant does your books, they should list these expenses individually. Then the second one is advertising, and that relates to any advertising that you do. If it's printing flyers, if it is putting a logo on your bakkie, if it is putting an ad on the radio, whatever it is, that's what this advertising line refers to. Then we have bank charges, which we always have to pay if we have money deposited or pay money out. There will be related bank charges. Computer systems would be if you in an environment where you use computers to generate your orders or to invoice, you would have to pay a monthly fee probably for computer systems. Cleaning, if you have any kind of office, you can put through cleaning expenses. Then we obviously have electricity when it works. You would put through any electricity expense, and we'll talk about how, if necessary, we can reduce or make that more cost effective. Then insurance, I'm sure you all have to have insurance. Rent, if you're renting a place. And even if you're working from home, there is a way that you can take a portion of your home as a rental expense. And so you would just need to speak to your accountants about what percentage that is that you can put through on your income statement, because that is a legitimate business expense, and it goes to reducing the profit, which means you do pay less tax. And if someone were to buy your business one day, they would need to put that rental expense, the relative rental expense, into your income statement to see what profit they would make. And then repairs and maintenance, this relates to any equipment or vehicles or anything, or even a physical building. If you have a physical building, any repairs and maintenance that you would need to do. Salaries are obvious. If you have stock stored anywhere, do you need security? Stationery that you use in the business, any telephone or data expenses, which I'm sure you would all have. Transport, that is transport getting to and from any installation or repair that you do. If you have uniforms, I was talking to a client the other day, and he was saying that 90% of his business comes from the uniforms that his staff wear. And so if you don't have uniforms in your business, even for yourself, if you're walking around in the shops and you've got your company name and number, it's a really nice marketing tool. So make sure that you're making your uniforms cost effective by not only using them as uniforms, but also using them as advertising. And then any vehicle expenses, if you need to do any repairs or anything, any training that you undertake, and then owner's drawings, which is basically the money that the owner of the business can take if there's any left after you've paid all of these things. And so in terms of the cost effectiveness, these are the expenses that you can make cost effective. And a cost effective means basically that you're getting more bang for your buck. So essentially, you know, if you've got someone who you're paying to do your accounting, you know, they should also be doing your annual financial statements. And if they are good, they should be assisting you in terms of monitoring your expenses, which we're going to talk about in a minute. So when you've got an accountant, make sure that you're getting your money's worth out of them. Otherwise, they're just recording your expenses, and that's not all you need. You need them to do. You should get them to be giving you advice on how best to maximize your profitability. Advertising, you can make more cost effective by doing things like, instead of having a billboard, if any of you ever did that, you could rather maybe print flyers and distribute flyers, or, you know, either you could, advertising you can reduce or make more cost effective, but obviously by reducing that, you're limiting your exposure. And so the way you can make advertising more cost effective is, for example, get a really nice ad designed, but then use social media to do it instead of printing flyers, because social media doesn't cost you any money. So just think about these ones that are highlighted and say, how can I make these more cost effective in my business? Electricity, you make more cost effective by switching off the lights, basically, and, you know, putting off geysers and stuff as you go along your way. Repairs and maintenance, if you do preventative maintenance, that's going to reduce your expenses. So don't wait until something's broken, rather try and do preventative maintenance. Salaries you can make more cost effective by employing people per job or on a part-time basis if you don't do that already. Instead of having permanent staff, you can pay people by hour if that becomes a prohibitive factor in your business. Transport is just about planning your routes. So if you're finding that you're driving from one end of the world to the other, you should try and consolidate your trips so that you are making your transport expenses more cost effective. Vehicle expenses is the same. It's around preventative maintenance. And then training you can make more cost effective. And this is a good example by doing stuff online. If you do ever need to send your staff for training or anything like that. And then the things that we can reduce are bank charges. You can always talk to your bank about the charges that they're charging you. Everything's negotiable. And these days, things have changed where, you know, years ago, we used to be begging the bank to do business with us, but now it's the other way around. The power is definitely in the customer base now. Computer systems, cleaning, you can just use less stuff if you portion stuff properly. The same with electricity, insurance. Be very aware of what's going on with your stationery, because that's easy to run out of control. And obviously monitor your phone. And we always like to say, if you don't ask, you don't get. So this applies to any of the expenses that you have, particularly bank charges. They're going to carry on charging you unless you ask for a reduction. And then I'm never popular when I say that the one thing that can always be eliminated is owner's drawings. If your business isn't making money, if it's not making a bit of profit after breaking even, then you can always eliminate the owner's drawings. And so what we do is we talk about how to manage all of these expenses. The best way to do it is to benchmark your expenses over time. And so we go back to that example that I gave you earlier of your income statement, where you have your turnover less your cost of sales, gives you your gross profits, and then your on that previous one, it was just one line with the ops expenses. But what I've done here is I've just listed a couple for the purpose of this example. So in this example, we'd have telephone, bank charges, fuel and travel costs, and salaries. And if you add this up, it comes to that 40,000. And so how we benchmark, so benchmarking, as most of you know, is just a fancy word for comparing. And we want to benchmark our expenses over time so that we can see if they're going up or down. And the reason that we use this way of benchmarking is that it doesn't often help to just use pure numbers. And I'll explain what I mean by that in a minute. And so how we do benchmarking is we express our expenses as a percentage of turnover. And how you make that calculation is you take the expense times 100 divided by your turnover. So we're always looking at what piece of the pie each of these things are taking. So if my turnover in a month is 85,000, how much of my pie, which is 85,000, are each of these amounts taking from what I've made in sales? Because this is the money that you've got basically to cover your expenses in a given month. And so you take the expense times 100 divided by your turnover. So in this example, we've used a salary bill, 25,500 times 100 divided by your 85,000 will give you 30% as your percentage expressed, your amount expressed as a percentage of turnover. And so you would do this for each and every one of these amounts so that you can compare over time. And that's what we're hoping to achieve here. And so just to make that more understandable, we have month 1 here and we have month 2 here. And under normal circumstances, I would get you to calculate this yourselves, but I'll talk you through it. And so you'll see that in the first month, we made 85,000 Rand in sales. And in the second month, we made 95,000. And we're going, wow, that's great. So we always want to be in a position where we're increasing our sales. So we would say that's excellent. Our sales have gone up. Then we have our cost of sales, and we see that our cost of sales has gone from 40,000 to 44,650. So that's gone up. And our GP has gone from 45 to 5350. And so if we look at these numbers, we go, wow, we're making more gross profits. So that sounds like a really good thing. Then our ops expenses have gone up to 45,055 from 40,000. And now we have to look at what has gone up here, because we need to investigate this. So, often our accountants or bookkeepers will just give us this information. And it really is up to us to interrogate it, because this is operational finance. This is how do I improve the finance of my business operationally. So it's not high-level stuff, but it really can help you to drive the profit in your business. And so it's broken down here, and you'll see the phone stayed the same. Bank charges went up. Fuel and travel costs went up. Salaries went up, and the other expenses stayed the same. And then we made a little bit more operating profit, or EBITDA, 295 Rand more. So how we calculate it, as I showed you in the previous slide, is we take the expense times 100 divided by turnover. And so we start with our GP. And if we previously did this calculation, and it works on the same basis as expenses, where you take your gross profits divided into your turnover, and you'll see that your GP stayed the same. And so you should always have benchmark gross profit amounts. So you should know what your GP is in your business on average. And if there's a change, you need to understand what happened. But in this case, it's the same, so we don't have to worry about it for now. Now, if we look at the 3 expenses that went up, we may run off and go, oh, we need to do something about these fuel and travel costs. We need to do something about these salaries. We need to do something about the bank charges, because on face value, when you look at the pure numbers, they've gone up quite a bit. And so when we do the calculations now, if we take this calculation where we take the expense times 100 over turnover, we can see that our telephone actually went down. So we're not going to waste a lot of time investigating what happened there. If we look at our bank charges, you will see that actually the benchmark percentage stayed the same. So again, we're not going to run off and go and look at our bank statement to see why this has gone up money-wise, because the percentage has stayed relative. And then fuel and travel costs have gone from 8.5 to 9.5. So if this were my business, I would definitely investigate what happened here, because it's gone up by a full percentage, which is a lot of money at the end of the day. And so a lot of money that you've now somehow spent to generate these additional sales. So you need to look at what happened here. Is it because I generated more sales that I was driving around more? But because it's increased by such a lot, you need to make sure that you understand why. If you just leave it, next month, this might be 12%. The following month, it might be 15%. It could be something as simple as the petrol price going up, but it is very important that you understand what has happened with this expense. And then likewise with salaries, even though the percentages stayed the same relative to your sales, this is quite a big increase. So if this were my business, I would definitely look to see what it is that's caused me to spend this additional money. And the whole purpose of this is to make sure that month on month, year on year, you have a kind of objective way to manage your expenses and see what's going up and what's going down. As I said, if you just leave it, then you've got no idea, and if you take it on face value, you might be running after an expense that actually doesn't need the attention because it's actually quite relative to what you were doing in previous months. So I'd really encourage you, when you get your income statements from your accountant, to do these calculations. And most importantly, in small business, it's critical that you record this stuff. I've come across so many small businesses that don't even do an income statement or don't even keep any record of what they're doing in their business. If you don't know, where you're going, then you can get there any way that you possibly can. So make sure that you are keeping a record of these expenses, even if you just write it in a book, then at least you know what's going on from month to month. And then the other very important thing is that you have a personal budget. So you must always remember that you and the business are two separate entities. So you can't put all your personal expenses through the business. You must have a personal budget where you separate you and the business. And a lot of us don't do this in small business. The business should pay you a salary. So make sure that you in your budget, that you have a salary that you're going to draw from the business, and that the business pays you that salary. Again, that would go through your income statement as an expense. Don't withdraw more money than your budgeted salary. If there is more money, then the business can pay you a bonus. So try and get into this discipline where you put 5,000 Rand a month as a salary, or whatever amount you choose. That amount goes through your income statement every month, and that's what you draw. And if there's lots of money left over in the business after you've paid all your expenses, then you can pay yourself a bonus. One of the biggest problems that happens in businesses, number one, is that all the expenses of the owner get put through the business, and so there's no money left to pay the actual business expenses. And then the owners also, when you see that you've got a lot of profits, you suddenly go and buy that new car or that new TV or whatever, and then you end up with cash flow problems. So make sure that you have a budget for your business and a personal budget, so that you can make sure that you are not taking too much money out of the business. And then just as a final tip, when you do your budgets for the following year, you can use these benchmark expenses. So if, for example, you decide that you want to increase your sales turnover by 10%, if you have these percentages in a spreadsheet, it can automatically calculate, sorry, that was hard to say at this time of the morning, it can automatically calculate what these amounts are by using, so if you increase this by 10%, it can calculate all of these relative percentages as to what you should be spending on a monthly basis on your different expenses in the business. And that's the end of the presentation. Thank you.